Well, good evening all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, and we're at the 16th of December already, 2024. We're getting on to about 6:40 p.m. Central Time. You do realize this is the last full week before Christmas, and of course then you get mixed trading going into the first of the year. So this is the big time. A lot of evening up by people. People going to be going away later this week. Trading changes. This is the Santa Claus rally time. It typically kicks off on one of 2 days. According to the Moore research, it's tomorrow. And according to Yale Hirsch of Traders Almanac, it's December 26th. So you got 2 ways to look at it, and we'll see if the markets pay attention. So this break today, or tonight I should say, because you had a hard rally today, a good rally, that's more than welcome by traders that are looking for that. In the metal markets, more of a sell-off. I think it's just complete disgust that China can't come out and make statements to support their own markets. When you look at the energy markets, trying to sink back. The question is, can you get under the 70 level and stay there in the crude oil? That's going to be a big question. Natural gas has been selling off a little bit. Notice, by the way, that we've gone over to the March contracts here. All of the currencies are now the March currencies. You should be in March, lead month in the grain markets, and a minimum in the Feb contracts in all the energies. So other than Bitcoin, which you can trade still, this is where all the volume is taking place, is the December contract. So I hope you adjusted, because that's how it works in the futures market. Now, what we're going to walk into tomorrow is some news that we get in advanced retail sales data for November. We'll see that at 7:30. At 7:55, Red Group sales will come out, and we get that every week. We'll see how they're holding up. They were not strong last week. We'll see if they come back. The Federal Reserve at 8:15 will release their monthly industrial production and capacity utilization data. The National Association of Home Builders will release their housing index. That's at 9. And then we wait till 3:30 in the afternoon. And at that point, what we're going to get are the API numbers. But this is all leading you up to Wednesday's FOMC decision. CNBC's already said they're going to go with a whole day of programming on it. Probably starting around noon or 1 o'clock. They'll spend the rest of the day talking about it, what the dot plots mean. They'll get a lot of hosts on there to give you ideas. I'm of the opinion the Fed is going to go for a 25 basis point cut, and that will be it for a while. I think they're going to say then they're going very data dependent. They have to answer questions on how sticky inflation is getting. With that stickiness, how do you keep cutting rates? What are you trying to accomplish? And why are they doing it? They'll probably say labor weakening to a degree, because they can't argue the inflation story when it's sort of sitting where it's at. It's not advancing, but it certainly isn't breaking very much. So it's got to be that they're trying to cushion that market, and then they might say, well, maybe we should wait and see how everything else goes. That's the game that I think you're going to enter. So let's come over here. Let me get to the charts for you. Right there. All righty. And let's take a look at our first chart. On the E-mini weekly S&P 500, you're stalling. The market is for the week, and remember, we're only into day 2 of the week right now. We're up 0.25%, up 17 points. As I said, you had a very good rally today. And I think a lot of traders got out of December today, rolled into their March contracts so that they had volume. Notice how the market is just congesting right here. So what you want to see is a breakout over this number in order to get something big going in the marketplace. The pattern is still bullish. You still have higher lows and higher highs in the March contract. The market on a break, I can make an argument that 25 points lower, 61.21 could be the area where the market tries to find support, and it should not try to get back under the break low that we have right over here. And you can see this at the 61.10.25 area right through there. When you look at the Bollinger Bands, you're far away from them, top and bottom. What about momentum? Well, momentum's been lost. You had an embedded reading that you still lost, haven't hit the 18 week average, 18-day average of closes, you normally do. But if the market clears the most recent high, it doesn't have to do that. And that most recent high, if you and I come back, let's get over to, it's not, I hope it lets me get there. Depends how many days of data are here. I'm getting there very slowly. Yeah, that's good. All right. I wanted to get this. It's important. So you'd have to get over 61.70.25, and that is going to be the key. All right, 61.75, I think, was the day after the high. So that is the number you have to get up and over, and you haven't done that. If you take a look, today's rally carried to 61.63.75. So you still have pressure on the downside, and you have an overbought market. When you come to the NASDAQ, this is where all the power has been. Now, I'm fortunate if you trade QQQs and my spider, my traders have been long if they followed my recommendation from right here. And we track all the trades till we come out of them in the spider subscriber video. So it's been a heck of a ride. It's been a nice one. The markets I haven't had you do anything in have been the Dow and the Russell 2000. And these are the markets that are not in favor at this time. And I don't know if they'll even get the Santa Claus rally. I tracked the S&P for the Santa Claus rally. So we'll see what's going to happen with that. In the 10-year notes, it's a one-way street. As the market falls, interest rates go up. And we were back today to 4.41 in the 10-year note. I mean, that's a big number, okay? The most recent high has been 4.5. So how, even with the Fed getting ready to cut, does it really impact the market? Well, not certainly too much. The market already knows that's going to happen. In the 5-year, the same. Where it'll influence everything's the 6-month and the 2-year notes. But these markets are saying the economy is strong, period. And Fed cuts, not going to do very much right now. Might even make the market stronger. That's something you got to think about. In the dollar, you're meandering. You're going back and forth within the Bollinger Band. You hit the highs. You came back to the 18-day average. You finally sink back over here. You might go up to the upper band again, but you're already knocking on the door of being overbought. In the eurocurrency, void of a trend. You have clearly the higher high, and then you came down for the lower and low. Momentum sort of flattening out here as the market's been trading every day for the past week, hitting that 18-day average of closes and just sort of sitting. Not a trending market. That is the first thing to pay attention to. The British pound is fighting to stay over the 18-day average of closes. It's a coin toss. Heads or tails? Are we going to get a rate cut, or is the bank going to sit still? It is a head toss there. In Bitcoin, up and away. Now, MicroStrategies is now part of the NASDAQ 100. And as they do that, they've been buying more. I saw the interview today with the chair. My God. They are leveraged up to here buying this, and it's working for them. You cannot argue that it isn't working. If you do, you're in a room by yourself. They just keep issuing debt. They get the debt. They buy more Bitcoin. As the Bitcoin goes higher, they go out to issue more debt. They have the security of this behind it. And it's a pyramid. Any way you want to cut it, it's pyramiding itself, all right? Not a legal pyramid, so don't take it with a pyramid scheme. That is not what I'm saying. But they are pyramiding all the way up, and we will see. At some point, will the piper come? I don't know. I know that what this market's been famous for is it goes up, makes these dramatic moves, then gets a quick 30% or so correction, holds, and then it goes on for higher highs again. That's been the pattern. When you take a look at crude, again, my hand's going to wave because that's what we've been doing. You're already overbought. You're knocking on the door of the 100-day average of closes and the Bollinger Band. You did that in the Brent Friday and today. When you look at WTI, you went up today to the Bollinger Bands and obviously trying to stay over the 100-day and overbought as can be and not trending. You have a lower low, higher high. Same thing in heating oil. Certainly the bias is up, but it's a straight up move. These are vertical price moves. So you're going to throw a dart at the board to try to catch it? Well, why don't you do it back here? And then you wipe yourself out. It's not trend trading if you go to most people. They'll tell you that they're not seeing that. Natural gas has been to the upside. Higher lows, higher highs. It has trouble staying over the 18-day average. You had 2 days where you rallied to the 100 and smash right back down. Now, I view this as a market that's going to see production galore come, because what's happening is Ukraine wants to shut off the gas pipeline that runs through it to Slovakia, and there's one other country that's also getting Russian gas. And while this war is going on, that's craziness. Now, there's a side to it that says Russia needs the money to get there, doesn't want to cut that off. If Ukraine cuts it off, will Russia bomb that? I mean, they can easily do it. Don't know. But I know who has natural gas they can buy. We're over here, guys. We're over here. We can get it right to them. Of course, it's more expensive. It's not going over a gas line. It's going LNG. That's the way it's going to go to them. So we'll see. But it's a ready market for America. And what I do say is when it comes to natural gas, we're going to produce. That I do predict. All right. So with that, I'm Ira Epstein. I want to remind you that if you'd like, you can take a free trial to my full research. The word is a free trial. Just go to iraepstein.com under free offers. Give it a try. See how I write. See how in the mornings I put out the videos. I'm going to do a special report. I was going to do one today. Couldn't quite find the market I wanted to do it on, but I'll get close. I'll get one done before next day or so, and that's included with everything that I do. The special updates, the ideas behind trades, and of course the videos where I lay out everything I'm doing. If you're looking for somebody that's right all the time, I'm not him. I'm also not the guy that's wrong all the time. Is that fair enough? Pretty well balanced, but I have got a lot of experience. I think I do a pretty good job for the traders that like the way that I approach the futures market. And I do this in the spiders and the stock market. And of course, that's to me been an easier market because you're not dealing with 90% leverage. And traders like long-term trades there. So the same philosophy, and I'm pretty proud of it all. iraepstein.com. You can move your cursor to the top up here. If you're on a PC, you'll see an icon. It'll take you right to that area. I'm Ira. You have a good evening.